My name is Edith. Shinyi calls me Kiki. I've been in the mortgage and real estate industry for about 25 years. I used to be heavily in on the lender side. Basically, most of my career has been in mortgage operations, and that includes loss mitigation or basically in the foreclosure department. With all the time that I have been working in loss mitigation, I ended up coming to the other side, just helping borrowers and investors and be the liaison between the lenders and the end buyer. It's about 25 years now.
I'm sure you have a lot of experience you can talk about because ending on the bank side, now you change your journey to homeowner side to help navigate through that process. And a lot of people are losing their house after COVID. Now everything is getting so expensive. So we started seeing a lot of pre-foreclosure coming up in the foreseeable future. When I try to approach people going through a pre-foreclosure process, and not all of them are, in a bad situation. They are trying to save their home, and maybe some relatives recently passed away, the home was passed down to them, then they're trying to catch up the payment. So when the homeowner first getting this letter from the bank, their house is going to be auctioned off, like what steps should they take if they're struggling to make their payment?
Well, the first thing that a borrower should be doing is contact their mortgage servicer. The minute you realize that you might be in trouble, you may not be able to afford your mortgage, or you're just simply going through, like you said, a rough patch. It's early communication with the lender. It's going to give you the best opportunity, at least mitigate the issue. A lot of people have fear of the lender for whatever reason. It's like, unfortunately, many people have this idea that if I ignore it, it'll go away, or I'll address it when I can figure out the answer myself, right? But lenders are not in the business of taking properties from people. They don't want to foreclose on a property. With all the people that I've worked with, I have heard more than once, oh, the bank just wants to take my house. Well, that's not the truth, because they don't really benefit from taking the house. Ultimately, they make their money on collecting the payments and the interest. That was the whole point of originating a loan to begin with. Early communication can open many doors. And so you just basically get in contact with your lender and determine if you realistically can afford the mortgage in the future, right? So like, if right now you can't, but you have a sense of, I might be able to, I just need a little bit of time, depending on your situation, the lender is there to help you, or their representatives on the servicing area that is supposed to help you navigate through this process.
So that's a really great point, because you just mentioned like banks are in the business of making money. They're not in the business of foreclosing people. And then some of the struggle I heard is that when they try to call the bank, they give them this merry run around, kind of like you're talking to the wall. Is there any tips and trick that you can share? Like, who should I reach out to help them get past that initial few tier, like customer service, just get to the right person to talk about their case?
So the key thing that I said was that the lender has people in the servicing department that are supposed to help you navigate through the process. Unfortunately, not all representatives are created equal, right? You're going to find the individuals that are more experienced and have more knowledge. And it could be a customer service representative that answers the phone and they just have some knowledge. For the most part, most lenders have specialized departments. Most of them do, right? So it's kind of like a tier, right? You go through customer service, they address multiple of issues, like a lot of issues. But then you have like your collection representatives, their whole purpose is to collect right on the debt. And then when you have usually that's like 30, 60, 90 days. I mean, collection representatives collect, period. But once it gets past a certain point, then you're looking more so at the loss mitigation, at a loss mitigation representative or a loss mitigation department. If you are past a certain point and you just don't think that you can come to a short-term agreement with the lender, right? You need assistance greater than a repayment plan. Then you want to speak with a loss mitigation specialist. If you don't want to waste time, and I would just kindly ask, hey, I'm going through a situation right now. I really need to speak with a loss mitigation specialist. And they usually will, depending on the lender, some lenders gatekeep, right? So before they hand you down to the next person or to let the level up, they might want to say, hey, let me try to help you first. right? It is important that you just, again, kindly, but in an assertive way, just ask to speak with a loss mitigation representative. That's going to save you a lot of time and headache, and also just having to tell your story over and over again. People that are in foreclosure, they're embarrassed. It's a very uncomfortable position to be in. And so they already don't want to even tell their story one time. So by the time they get through the customer service representative, and then they go to the collections representative, and then to finally get to the loss mitigation representative, it's almost like they're going up, a steep, right? Exactly. So yeah, skip the line, get through, and then just request to speak with the loss mitigation rep.
That's a great tip. So, well, once they get through that initial resistance to get to the right department, what should they do to prepare themselves to have a better chance of getting through that decision point the banks are usually looking at to make sure they can be approved?
The best thing you can do for yourself is understand your financial situation, right? Is it a long term difficulty? Is it a short term difficulty? Are you currently employed? Are you unemployed and have no idea when or how long you're going to be going through this? So it just really depends. Loss mitigation options are based on your current state of financial situation, right? So for somebody who is unemployed currently, you become unemployed today, right? You haven't missed any payments yet, but you know that you don't have a cushion to pay, or you only have enough for 1 month maybe, and then it's unknown, and you proactively contact the lender. In order for you to be reviewed for any type of loss mitigation option, you first have to be delinquent, right? Now, if let's say that you are delinquent, and let's say that you're on like your first or second month of not being able to pay the mortgage, and you contact, again, this is still early communication. You get in contact with the lender and you say, hey, I'm going through a struggle right now. I lost my job, whatever the situation is. They're going to initially try to work with you in creating a repayment plan, right? If it's right now, there's such a short delinquency, that let's see if we can just spread your payments out. But the problem when you're unemployed and you don't have the money to pay this month or next month, that if they spread it out into some months, it only means that they're grabbing and tagging more on a monthly payment. So the best option, and your initial best option, is to request a forbearance, right? There are forbearances that are based on the situation. If it's unemployment, there's an unemployment forbearance. If it's just life happenings, there's usually a time frame in which you can be placed on forbearance depending on your loan type. And then what usually happens is the lender will place you on a forbearance and then check in with you like close to when the forbearance period is over. It is important that you continue to keep the line of communication open with the lender, because when they reach out to you when your forbearance is about to be over, you may have the possibility to get an extension on that forbearance,
Wow,
right?
that's a good tip. Yeah, we see a lot of forbearance happening during the COVID. My understanding of forbearance is that they are okay with not making the payment for a certain period of time.
Okay.
The bank will make a determination. So in the end of that forbearance, does that mean they all of a sudden have all the payment just all due in a lump sum? Because that would be almost impossible to catch up.
So yes, I mean, technically at the end of the forbearance, you are due for all the months that you've been in forbearance. However, the reason why they reach out to you right before the forbearance ends is because they want to give you an opportunity to, if you say, I know my forbearance is almost over, but I still don't have the money to pay, I'm still behind, or I only have partial, that's when they're going to review you for an actual loan modification or another loss mitigation option, right? That's the time when they're going to try to help you. Let's say, for example, you're employed now, right? Let's say it's been 6 months and you finally found a job. You just started your job. You know that your forbearance ends at the end of the month. So it's going to be next month, it's going to be due. And you say, hi, I'm finally employed. Yes, but I'm only able to make my regular monthly payment, right? I have a job to where if your payment was, let's say, $2,000, and you're going to be able to make only the $2,000 payment, then that's when you're requesting to be reviewed for some type of loss mitigation option. Then you would submit all your documents, pay stubs, if you have an offer letter, something that shows that you're going to start making payments, your regular monthly payments, and then request to be reviewed for a loss mitigation option for retention. That's if you want to retain your home. Now, if it's been 6 months and you still haven't been able, or it's about to be the end of your forbearance, you still haven't been able to find employment, or not find employment, but in your request an extension of the forbearance, if they don't have that available, you might want to look into liquidation options, right? This is liquidation options basically mean that, hey, I am painfully aware that I can't afford my mortgage. I've been in forbearance. I still don't see a light at the end of the tunnel, and I don't want a foreclosure on my record. So let's figure out how we can liquidate. If there's equity in the home, 9 times out of 10, you just basically let them know, hey, I'm going to try to sell my home. And you can usually get some time, a little bit longer of a forbearance to allow for maybe the selling of the house. But if there's no equity in the house, then you might want to see if you can be reviewed for a short sale, or if you don't even feel like you want to be bothered with the process, because it is a process, you can see if you qualify to do a deed in lieu. Think of it as you own a car, can't pay your car, and they're going to repo the car. Well, instead of repoing the car, you just turn the car in. You say, here you go. I can't pay my car. Here's the car back. And then you kind of go through that process.
So just so that our audience understand the difference between short sale and deed in lieu, that's a great point you just brought out. Like short sale is usually when the current value of the house, right? It's lower than what they owe, right? Would you say that's the correct definition?
Yes and no. So a short sale happens when the seller has to bring any money to closing. So if you think about it, let's say, for example, you owe $210,000 on your mortgage, right? And your house is worth $210,000. So technically, it's right. It's right there, right? You should be able to like sell it and pay it off. But the problem is you have commissions, you have other things that have to be paid. So if you have to bring any money to closing and you don't have that money, then that would be considered a short sale. Now, if, for example, you have $10,000 in the bank, right? And that's what it would take for you to be able to close on it, then that also could possibly not be considered a short sale because you have the assets to come to closing with that money. Part of the short sale process entails that you have to show your financials, current financial situation, which is one of the reasons why they ask to show proof of income. If there's no income, you just basically give them a letter saying that you're not currently employed, or something that shows that you're not currently employed. But then you also have to show your bank statements. A lot of people back in the day, like 2008 or whatever, when they stopped making payments on their houses because they were like, well, my house, I bought it at a high price and now it's all the way down here and I'm just not going to pay for a house that's not worth, and they stayed in the house, it would be a short sale, right? When you have money in the bank, you have enough money to be able to pay off on your commitment, they're not going to consider that as a short sale. The whole concept is just because your house lost value doesn't mean that you stop being responsible for the commitment that you acquired when you first bought the house.
Correct. And for the deed in lieu, I know we usually discourage people to do that because it's almost like cash flow key, right?
So something that's very important when you do a deed in lieu, yes, you give up the keys to the house, and basically you want to make sure that there is an agreement between you and the lender that there's not going to be a deficiency judgment. Same thing happens with a short sale, right? If you're selling the property for less than what it's owed, that's the short sale, right? So let's do an example. Houses, you owe 120,000, sell the house, they net 100,000. There's $20,000 that's deficient, right? Usually in a short sale negotiation, you make sure that the lender basically says, I'm not going to come after the $20,000. That's part of the short sale negotiation. In the deed in lieu, you can do the same thing. Basically say, hey, I'm giving you the keys, but I need us to agree that if there's a deficiency, like when you go and try to sell the house as an REO, you're not going to come for me for the deficiency, right? So that's something that you want to make sure that is in writing. Now, the problem with that is that a lot of times that's counted as income because they're forgiving a debt to you, right? And so you're going to be issued a statement at the end of the year saying, we forgave this amount. So you might want to be in contact with an accountant to see what the ramifications of that would be. Usually, as far as I know, it's looked at as almost as a gift. So there's a higher percentage of taxes that's assessed on that money. So you might want to talk to an accountant for that. The reason why you might want to do a short sale or a deed in lieu is because you get the opportunity to make that agreement with the lender, right? If the house was to be foreclosed on, let's say that you're just like, I don't even want to be bothered with it. I don't care. The property's not worth it. And you just let them foreclose on it. Well, when they go to and they complete the foreclosure, the judgment's going to happen. You didn't have the opportunity to negotiate that judgment. And so you're better off dealing with the bank and actually working with them and going through the process than just throwing your hands up in there and saying, I don't want to deal with it.
That's a great point. So basically you're trying to, instead of just giving up, let them walk over you, like just take my house, I don't want to think about it. You don't want to really lose the bargaining power, right? We're trying to make it easy for them, but in the end, if you don't negotiate that upfront, if I wrote some keyword here that you could potentially being chased by the bank, they're going after you for the deficiency judgment, the difference of what they can sell than what you owe, that's still coming after you to affect your credit. Also, the whatever the short sale that's being approved, that will still count as income. So definitely go talk to your tax professional, CPA, and then consult them on that. You mentioned about repayment plan. Is there any difference between repayment plan versus the loan modification?
Yes. So a repayment plan is shorter, right? So we're thinking short term. Let's say that you missed 2 payments, right? Okay, I need to split those 2 payments into, like, let's say 6 to 9 months, right? Usually a repayment plan is between 3 to 6 months. It's kind of like what they want to spread it into. That just means that your payment's going to be higher for 3 to 6 months. It's like a band-aid. It's a short-term solution. A repayment plan would not be a good option for you if you owe a substantial amount in arrears when you're behind on the mortgage.
Right, because the payment will be much, much higher, right?
I mean, I've seen people that, let's say they lost their job and they missed a couple of payments, and then they get a better position and making way more money, and they are able to afford the substantial increase in the spreading of that. It all comes back to the same thing that we spoke about earlier. You need to understand what is a realistic amount that you can afford, right? You have to have a good picture of your own financial situation and what you're able to afford, because the one thing that you don't want to do is come to an agreement with the lender and then not deliver on that agreement. It's almost like when you make a promise to your kid, I'm going to do this for you, and then you don't do it. They stop
Right.
trusting you. Same thing happens with the lender. If you come up with multiple agreements they'll give you a couple of chances. But every time you violate or you don't perform on an agreement, it takes away your credibility. So definitely, please, please, please don't make any agreements with the lender that you're not going to be able to deliver on.
Right. Then as for the loan modification, would that be just more like a long-term solution to permanently modify the loan?
That's more of a permanent solution. So a loan modification, basically, depending on your loan program and depending on your lender. So there are different loan programs. You have your FHA, VA, conventional, reverse, like it just depends, right? Depending on your loan program, there are options for what they can offer as far as loss mitigation is concerned. Usually it's modifying your current mortgage. It's almost, think of it as a refinance, but you're not credit qualifying, you're in a hardship. So it's like a refinance without all the fees that you're being charged to refinance, although you're technically paying those fees and foreclosure fees. But yes, think of it as a refinance. It's a modification of the terms. With loan modifications is that when interest rates are low, when people went through a hardship, um, okay, I'm going to age myself, but back when I bought my first house, right? Interest rates were at 7.25%, right? Let's say that I kept that mortgage 2020, 2021, when interest rates were at like low, like 2.5. Let's say that that's when I experienced my hardship, right? I kept up with it, and then boom, COVID hit, and here it is. I never refinanced. I never did anything, but I'm in a hardship right now. Well, a loan modification would have been a beautiful option for me there. Oh, the only thing they were doing is they refinanced my mortgage and gave me a lower interest rate, so my terms are better. Awesome. But for somebody who bought their house in 2001 with an interest rate of 2.5, right,
Right.
and experiences a hardship right now when interest rates are what, 7.25, then that means that the terms of my loan are going to change and I'm going to lose my interest rate, because when a loan modification happens, the terms of the modification are based on today's current market conditions.
Right.
So the interest rate could go up almost, if not as high as today's current market, slightly below market, right? And I still would be losing my beautiful interest rate that I got back in 2001.
Yeah, that's exactly. I think a lot of people are in trouble, even though right now they're going through loan mod. Then they realize that the term is actually worse. The rate's higher, the payment's gonna go up.
Yes and no, because one thing that lenders are doing is, although they're refinancing, technically they're modifying the terms, they're giving you a higher interest rate, but they're also spreading the term. So you're going from a 30-year loan to like a 40-year loan. And so it may not feel so strong at the time. You may not feel like, oh, my payment went up so much, but you just added 10 years worth of interest to your loan. So for people who are like me, for example, when I built this house, I said I'm never selling it. I'm never gonna sell another property ever again, just because I understand the value of real estate now, right? And so I'm gonna keep my house, right? Well, for me, adding 10 years, if that's the only way I can keep my home, it's not a big deal. I want to stay. But even for people who want to sell it at some point, if you understand the value of real estate as an asset that appreciates, then it may not be that bad if you're able to stay in the house right now. And then knowing that at some point you're just going to refinance it when you're in a better financial situation and hopefully bring back down the term of your loan. So it just really depends.
In the end, the homeowner have to make a decision, can they afford making this payment, or however the modified payment is going to be, can they still afford that? Would that make sense to keep the house, or would it make sense for them, if knowing that they might not be able to financially afford this house any longer? Maybe downsizing is another option. We don't want it to wait until the end when they have no negotiation room with the bank, and then all of a sudden, like, all the options are out.
Yeah. Yeah. One of the reasons why you also want to catch this early in the game is because while you're in active loss mitigation, or while you're in a forbearance, or in a repayment plan, or just being reviewed for loss mitigation or loan modification, you're still in this safe zone as far as attorney fees and like corporate advance fees and stuff like that. If you don't communicate with your lender and you just let it get so far as to where you end up in foreclosure, the attorneys are now starting to eat up on your equity. So there's corporate advance fees, there are property preservation fees, there's obviously your escrow advances, because if you're not paying the mortgage and taxes and insurance are still due, they're still paying them, they're going to be paying those. So you're quickly eating into the equity in your home.
Correct.
So that's another reason why you want to be proactive and just communicating with the lender and just trying to figure this situation out before it becomes before it becomes an active foreclosure situation.
Right. I think through my journey of like working with a couple of pre-foreclosure cases, especially the government-backed, government-assisted program, are there any banks that are more lenient or more forgiving through all the balance they owe in the back of the loan? We've seen that a lot during COVID, right? Like just basically like a silent second. Mostly your government-backed loan, correct?
Yeah. So COVID was a different animal to begin with. I mean, because of the situation, just such a painful time for so many people simultaneously. There were agencies or programs like the Homeowners Assistance Fund that would basically either grant a loan or a grant to catch up on those arrears, as well as, for example, for FHA and VA loans. At the time, VA stopped doing it later, but they were doing partial claims, which basically was grabbing the arrears and then putting it on the side of the loan as a silent second, right? And so Conventional loans also had something of the sort where it would be kind of grabbing it, and instead of putting it in a silent second, they would put it at the end of the loan, almost like a balloon, right? So
Right.
you keep your same terms, and we're just going to put it at the end. So when you're done with your 30-year, at the 30-year mark, your last payment, boom, the rest is due. With the knowledge that a lot of people are going to refinance that loan anyway, so it put like a band-aid on it and then
Mhm.
just let people move on from the situation, because COVID was a very painful period for a lot of people. Believe it or not, even though COVID happened a few years ago, there's still some residual funds from COVID. Some states ate through their funding quickly. If you weren't one of the first ones to take advantage of the COVID hardship as homeowners assistance fund, it might be too late depending on your state. There are other states that still have some money, but one of the prime requirements is that you had to have been affected by COVID. For example, if you worked for a company that was affected by COVID, but they somehow crawled their way through and are just now years later feel like losing the battle against COVID, you still kind of originate that hardship back to it all started during COVID when this happened, hours were cut, whatever the case may be. If you did end up falling behind during that period of time during COVID, or if you are just falling behind and it's from the effects of COVID, and there's funds available in your state, then you can still take advantage of that. But just remember that the biggest or the main requirement is that you have to have been affected by COVID. And that doesn't mean that you had COVID,
Right.
although I feel like probably everybody did. And you have to literally say that I was affected by COVID.
Let's see.
This is when my hardship began. Because there were people that were affected, but they had enough of a cushion that they could stay afloat. But once you eat up through your cushion and then you fall into a hard time, you were still affected by COVID. There's some states that still have a little bit of funding. And that was great for a lot of people. I actually worked with a borrower who literally got a grant for, I think it was $20,000.
Oh.
So can you imagine? It was like a breath of fresh air for her because she didn't have to worry about having to repay that. It's not a second lien on her home. It's not an additional cost. Her terms didn't have to change. And so, yeah, it was a great program. I know Atlanta, for example, Georgia, they still have some funds, for example, and I have a borrower right now that's currently going through that process. I would be lying if I said that the process was an easy process. They do ask for a lot of documentation, but a lot of it is redundant. It's the same thing that the lender would ask for anyway. And so if you're going to be asking for assistance from the lender, might as well ask for assistance from the fund and see. The worst I can say is no, right?
I think some of the nonprofit agency also have some fun. I've seen them come and go,
Yeah,
right?
NACA is one of them. I mean, there's several. A lot of them are state specific. So, I would just look into Google, my best friend, literally Google agencies that are assist with mortgage assistance. Yeah,
Okay, great.
state assistance.
Right. Well, thank you so much. You have provided so much value for us to sharing the insight. Are you still specifically looking to work with the investor or homeowner?
Yeah, so my team, we work nationwide. We literally work with anybody that needs assistance. I tell this to everybody. What we do is not rocket science. It's not something that a borrower couldn't do themselves. The difference between us and the borrower is that this is what we do all day, every day. So navigating through the system, knowing how to speak with the lender, knowing what to demand from the lender, it's something that we just are so comfortable with just from experience. Just we've been doing this for a very long time. And so for people that are intimidated by the process, it always is helpful to have somebody that's on your corner, being the liaison between you and them. Not to mention that I always say our team, we do what nobody else wants to do. They don't want to deal with being on hold for hours and having to escalate requests and continuously following up, but resubmitting documents that the lender says that they haven't received, and so on and so forth. So yeah, we work nationwide. And we help people. Now there is HUD does have free counselors to help individuals. The only issue with them is that unfortunately, um, they're very busy because anything that is a free agency, government agencies, they're overwhelmed, right? Especially with all the people that are currently in foreclosure, trying to have a counselor that has the capacity to help as many people as they have, you can end up falling through the cracks. So not discouraging people from contacting them for sure, that it's better than you trying to do it by yourself and not having anybody on your side. But again, it's not rocket science. You 100% can do it. It's just, do you want to?
Right. So, or you can hire somebody like Edith. She has a team, I wouldn't say rocket scientists, but they do have it nailed down to every little bit, and they know what to say, who to call to help you expedite your case all the way to the top of the line. And I've seen you work with many, many investors. You know, they're also my friend. You always get it done, get it postponed. You have the heart for it. You know,
And that's the biggest thing, Shinyi. It's not an easy process, but I do believe that I'm helping people. And that's something that definitely makes a difference. You want somebody who cares about you. I take it personal. And if you talk to some of the investors, they'll know that I'm literally fighting for
them.
There's been plenty of situations where a lender tells me they can't do something that I know they can do because I was on the lender side. There's been more than one occasion in which I walked them through how to do their own job. If I hadn't been there for those people where I had to walk the lender through how to do what they need to do, they probably would have just been denied. And a lot of people don't even know how to just even that they have the ability, or they get sent a letter saying you can appeal, but they don't even know how to appeal. Even if they do appeal, a lot of times it just gets denied because they didn't really know how to appeal.
I think, you know, Greg, like he was telling me about, there's one time you get on the phone with a lender. It was like superpower. Get past the line, talk to the right person, get a loan modification, like approved over the phone. I was like, what? So I'm so glad you decided to come to my first ever podcast. Like you said, right? We're here to help people. We do things with a purpose, and it's not always just about the dollar sign. So that's why I am so honored to have you come out as my first ever guest. Thank you so much. If anybody want to reach out to you, what would be the best way to contact you?
I can give you the best phone. I do have a form, but I can probably send it to you. I don't know if you
I can
link
include
it.
that in the link and below for this podcast when we publish it. So, what would be the turnaround time? I know you guys work so many cases. Sometimes you have to prioritize some of the cases. What would be the expectation that they
You
need to
usually
expect?
get a response within 24 to 48 hours. It's literally, I mean, obviously if it's an auction that's scheduled for tomorrow, they're going to be called today, right? It just depends. I would encourage, for if you're filling out the form, in the comment section, include as much detail, because we do look at all of them and then sort it by priority. And then based on that, it gets assigned to the different team members. They're prioritizing their work based on most urgent, right?
You need to at least have like a mortgage statement, or maybe look at the very last letter that came from the bank. Usually have the loan number, which number to call,
Yep.
when the auction is posted. So that will be like minimum, right? Anything
Yeah, if
additional?
it's on the form, if it's a question on the form, it's important.
Don't throw it away. Read it and decide what
Look
to
at the
do.
form, fill out the form.
Right.
Some of the fields are made required for a reason because we need to know.
Okay. Well, thank you again so much. I look forward to many future opportunity working with you. And thank you so much for making the time to come to my podcast today.